I'm going to do the breakdown from the NAS 100 position that we took. We took this position during New York session, and it was a great setup that we like to see. Now, we actually took profit before the actual setup that we like to see happens, and it happened way later, in the session, so that's okay. You got to take what the market gives you, right? So what we have here, I'm actually going to bring back some other screens really quick. Give me 1 second. So what I'm going to do is I'm going to share my screen. And first we'll go, a little bit into the bias that we talked about on, Sunday. And then we'll talk more about where this could go to end the day. All right, so let me share my screen really quick. So first things first, what time is it? 10:40. Okay, cool. So first things first is, what is our dollar bias? When you're looking at the daily, this, Monday we had a bearish day after closing a higher high on the daily, which to me shows signs of more upside, to 105.50, possibly 106. But currently, right, when we woke up this morning, something that I do personally is I look at the time from 7 a.m., right? So what happened during the Asian session, what happened during the London. And one thing you can realize is that right here is that they actually made this lower low during the London session. So that showed me that price could have more chances to go lower when I was looking at, you know, 7 a.m., which is like right here. So we made a lower low right there at 8 a.m., showing it right here. And so what I was anticipating that was dollar would just come back up and continue to, go lower for right now. And the reason I'm saying that is because if you look here in the middle time frame on the 4-hour, we had already broke and closed below the 4-hour lows at that point. So it was more than likely to me that it would come to this double bottom right below 104.50. And so if that happens, you can kind of see, the projection I had about 3 weeks ago is that we came down here, we made the candle that we were looking for, right? Which happens to be the monthly open for February. And then price left. What we look for is that explosive price. Price left this major imbalance right here at that monthly open, right? So you got to think about what news is coming up, what fundamentals. And, next week will be NFP. We have quite a bit of news still, I think, this week. Let me look one more time. Red folders were today. 9 a.m. red folder, and doesn't look like anything. And then another 9 a.m. red folder on Friday. So I know next week is jam packed though. So what does the news really do? News is the excuse to push price to hurt traders the most. So what I was actually wanting to see at one point on dollar was when price came into this last up candle, were we gonna, not close higher than that? And so that we did, that kind of changed my, my bias. Since we're going higher, it feels like it could still keep going. So until we actually break lower than 104.50, I would say, my bias is still that we continue higher to 105.50, possibly 106. And if you guys look at the weekly, you have these 2 wicks that I'm paying attention to. Right. And then that would be, major psychological number 106, and then 107 where this candle would be, and then right above it. So 108. So if price fails to go lower, that's kind of like my understanding is, when you look at the 4-hour now and evaluate everything, I'm looking at this candle. And so if we fail to go lower and we just, make more liquidity like we have right here, then if price was to hold, as you guys can kind of see, we're getting that structure on a smaller time frame where price has made the lows, right? Closed higher. And now it looks like it's, headed towards more upside where there's only targets like that here. So I don't want to go too far and try to like predict, but I'm just saying like this is what it looks like right now. So, if it fails to go lower, then we'll know right here. But personally, for the long positions that we took today, we were wanting price to come lower. So good thing we, partialed out. But that's the dollar bias right now until that daily candle on the far left here. This candle is far up candle right here, 104.50. Until that candle is there's a close below it, and dollar's going to continue to go bullish for me. All right, so to take you guys into what I believe, once maybe you trade forex, maybe you trade whatever it could be, but I've gotten to a point where I like forex, I like Euro USD, I like GBP USD. I used to like the GBP JPYs, but what I trade is indices, right? And one of my favorites is NAS 100. So if you guys haven't joined the free Telegram, I'll show you guys here real quick. This is our Telegram chat. So all the trades that I take, personally, and markups and stuff go here. So you can kind of see like what we post, stuff like that, mindset, just different stuff like that. So let's break down today's trade. So what you want to do is you do want to have everything on 3 windows. I know this is a little crazy right now, so I'm going to actually erase some of this. You want to have everything on 3 windows so you can see it all in one big picture. But I'm going to go break it down from pretty much what I've seen today. And I'm just going to stick to a 5-minute. So in your trade plan, you're going to want to have, a specific, regimen that you keep, like how you enter trades, how you exit trades, almost like a troubleshoot, right? For everything that you're doing in the trading. So let me go here really quick. How do I do this with 3 windows? I'm just going to erase everything really quick and kind of show you guys a full breakdown of how we do this. So for me, when I woke up, everything I look at is what's the dollar going to do at 7 a.m., right? So as you guys can see right here, would be 7 a.m., right, for NAS 100. And what I noticed was that we had taken the London high, or excuse me, the Asian highs. We had pushed into this 15-minute last up candle. And so there's little different things you can just kind of like pause this video that I do here on the trading view on and off to kind of like make it correlate to all the 3 screens. But like this one, I would want to see on all 3. This last up candle is something that we pay very important to. It's very much important to see here the last up candle. I need to clean some of these up. So this was a point of interest. This is something that we pay attention to. We want to see people getting stopped out from the Asian session. And so this was at 7 a.m. Now, me personally, I like to take trades in the first 15 minutes of an hour and the last 15 minutes of an hour. And when it comes to indices, I want to take that trade after New York Open. So now what I'm going to go do in here is show you guys where that New York Open was on a smaller time frame. So New York Open, horizontal array. And so what I'm doing here on TradingView is I'm just correlating onto all the charts, like I said, and then I'm using this magnet tool to go to exactly the open of the New York. So right here was 8:30 open, this down candle right here. So I'm going to mark that. And then we want to mark London open just so we know where it was at. So where I'm at, Central Time Zone, 2 a.m. is our London open candle. So you'll just correlate that to whatever your London open candle is. Now, something that we do with the way that we take trades is we actually use the point of interest, which is the daily opens, the market open, the London and the New York opens as points of interest to actually enter and exit the market. So I'm going to do the replay tool here in a second because this is just playing out from today. But let's go ahead and let's go into this a little bit more. So let's see what this looks like on all the time frames. So as you guys can see on the 1 hour, how this looks, right? How it was today at the beginning and how it looks here on the on the 5 minute. Okay, 1 second. So something that we look for is what I call the 7 steps to entering and buying in the market. So I'm going to show you guys these steps. Right. These are the 7 steps that we use to enter and exit the market. Right. So inside these steps, what we actually do is we actually look for each thing. So for me today, with my dollar bias, basically what I was looking for was long positions. I wanted to see more downside on dollar earlier today, right, during New York. And I was looking for more upside and maybe for this on a higher time frame if it was going to buy up to go and take this previous day high, which was 12,160, somewhere in that area. And so now when you go back to the New York session on the 5 minute, you can see that from those buys, you can just go back and look at that picture that I showed, but you can see that all the steps happened. All right. So what they actually did was at New York Open, they ran down to where? Let me go ahead and point this out really quick. They ran down to the London Open, right? So in this trade here, what we did, and something that may help you in your back testing, is I like to come in here like this, make sure it's on all the windows. And we decided that, that was a perfect setup for how we look for the markets, right? So it was below your New York Open. It was below your, or right at your London Open. So you're able to enter that trade right here, right? I just want you guys to see how it looks on all the other time frames now, like the higher time frames. So that was the 15-minute entry. So what we were essentially saying was that we wanted to keep our risk at this low, right? No further than this low, and we were attacking this 15-minute high. So if you look at the price on that trade, you were looking at getting in from right here, right at New York Open, to if we would have hit that target, it was about 100 points away. We were looking at 12,100, 12,120. So price failed to break, to me, this last up candle around 12,100. And there's certain things that we do here on the 5 minute. I have rules that if the price breaks the structure or if it does certain things in certain areas, then I will either partial the position or I start to pay myself. So kind of what you can see here was we seen price come down on into the New York Open, or excuse me, into the London Open on the 5 minute. And what that made me do was I was already having my fibs drawn up from this bottom, right, to this high. And I kind of have an idea from the shorts that I took yesterday of where I was attacking stop losses. So, we have the London highs here. We have yesterday's traders in this area here. And what I was looking for was personally them to come back and go a little bit higher and come for those shorts from yesterday. So when you see, okay, now that's what we got this entry. Now what made us, get out of this trade was on a 1 minute, it broke 5 minute and 1 minute structures, right? So it was breaking 1 minute structures very fast in this area. All right, so you look at the same time. And so it actually did the thing that we look for on a short, right? So it broke structure right here, right? So if you weren't exiting the trade somewhere before, it was just, this was a lower low, lower high right in this area, you lost a lot of what you took down here for sure. All right, so that was a quick position, I would say, for New York. Let me go back one more, just so that's 5 minute. But now look where we had the positioning on the 15-minute, right? This positioning was really good. So at one point during New York, it looked like this, like it looks like this now. We already took profit, right? But at one point, you had the entry from here. And so, it was looking really good for, dollar was getting very weak. It was breaking below 104.50 and was looking to go, further lower. So it made sense for, a 1 hour time frame, to potentially start heading for this previous high that we were looking at. Then, like I said, the shorts that we took the day before. And then when you look at the 4 hour time frame, that same entry didn't look bad, right? It was actually inside the open of this last down candle in the 4 hours. So for me, like I said, this high just looks like it was going to get hit, and then I was looking for this area of 12,400, 12,500 to be revisited. So let's see here. So this is what we were, like I said, what we were looking at one point, and then price went forward. And so this was when the actual mitigation happened. So when we took profit, it was inside the 5 minute. It was inside of here. Like I was showing you guys on the 1 minute and just started breaking down. We took about, I think it was about 80 points. And then that was the other thing, is something that we pay attention to, is 20 levels and 80 levels. We bought this trade at a 20 level and price failed to go higher than the 80 level, right? So that's very important. So now where was there another opportunity? The other opportunity was, like I said, when I brought the buy position over, let me pull this one. I brought this one out. Was here, right? Because later on in the day, price had closed higher, right, which is step 6 of our buying scenarios, and then price had pulled back into the area, but not just any area, right? It pulled back into a point of interest, New York Open, and then as well as you guys can look at the timing of this 9:55, right, 5 minute close. So it puts you in a very a good place for a favorable risk, and then price runs away from that area, right? So that's a really good trade. Both one, both the one from New York Open and then the mitigation, I believe, that happened here, right? Because as price breaks higher here, closing higher high, and then coming back to the same area, creating a higher low, but not just any area. Like I said, the New York Open, there could be a lot of buys, obviously, under this position that I took, and then also this area here. But the favoritism, for the US dollar to continue lower down for me at this point, on the 4 hour, which this is a new, has 3 hours left on this one. So go to 1 hour. Kind of, we'll have to see, but I would like this wick to get taken. So if that happens, then what you're going to see is more price push up when it comes to NAS 100 and the other indices. So that's currently what price is doing from the entry that we took. Like I said, we took most of our partials here, or you took the full position. It just depends on what you were doing. But like I said, I still have an idea that if this can continue higher, that these are relatively equal highs, and then that this area would be a target right here, the 12,160 in between 12,200 and 12,180. So we'll see what happens. You can't predict. There's not like a crystal ball or anything like that. But really quick, we'll look at Dow Jones here. And to me, there was so much divergence on the play, but on the 15, one thing that I pay attention to is, there was a low here created at London, and there was a new low created here, right? So at that New York Open position, they just destroyed anyone that bought during London, and now they've continued to make this look like they want to go to the downside from the points of entry. So a little bit different when it comes to all three of them today, but the position that we took, this was a mitigation play, and what we take as mitigation plays. I've, condensed my my trade plan down to very precise timing and risk, and where I'm going to place that risk, where I'm going to place that first take profit, what I'm going to do if price breaks a 5 minute 1 minute structure, and the goal is to preserve your capital. The goal is to not be in a position where you're it's a game of risk more than it is profit, right? Because there's two different traders. There's one trader that let's say they can do really well, like percentage wise over a profit amount. I think it really comes into psychology. It's something more I'll go into later, but the person that when it becomes a funded capital, right? So when you start playing with tens and hundreds of thousands of dollars, your psychology really has to be there. So um, yeah, that's the move for today. We'll see what they do, what plays out. Like I said, looking at dollar right now one last time. It kind of looks like on the 1 hour they want to pull it back up, maybe back into the 105.50. And then we have a little bit of news, I believe, tomorrow. So let's see here one more time. So we do have the news at 9 a.m. ISM manufacturing. So if you guys don't know what this stuff means, or you want to go back and look at the asset that you trade, here's the previous date releases, right? Back in 2022, January, they have one as well. And you can see exactly why traders would want to care what this is right here. All right, so this area right here. And just go back and back test, like that's why I trade the same time every day. Go back and back test the time that you trade and see what these effects maybe have on that previous outlook. So I appreciate you guys. Like I said, today is Tuesday, February 28th, 2023. And this was a markup from NAS 100 entry that we took. Like I said, you guys can join the free Telegram right here. I'll put the link in this description. And so this is our Telegram right here. So you guys can see that we actually took this trade today. All right. I took this one's Tuesday. This is kind of where the entry was. So right in the side that down candle, we've seen that higher high, we've seen that mitigation play, and then the push higher, and completely flies off. So that being said, guys, have a good day.